I see many of you right now in the crowd. It makes me very happy. But it would only take like another 30 minutes of your time with this amazing panelists, which are as amazing as everybody else that has spoken before. The last panel of the day is probably one of the biggest questions that we have in the crypto industry as well, and that is, can DeFi actually handle institutional money? We have as moderator Marina Barisheva. Hopefully, I said her name right. She's the CEO of Elkai Consulting. That's a Web3 growth executive who has worked with Bybit, KuCoin, NATO, and a lot of like other big companies. As speakers, we have Charles Jensen, MD, head of DeFi transformation as S&P Global Ratings. He's been in blockchain since 2013, so I guess he has like a bit of things to share here, and now leads DeFi and digital assets as. We have Claire Balva. She's the CEO of Adan. She co-founded blockchain partner, led KPMG's France crypto team, and now heads Europe's leading digital asset federation. Nathan Chiron, Chief Revenue Officer at IXEC. They drives growth at IXEC, a platform that lets developers add privacy to any Web3 app. And Andrei Benchik, CEO and co-founder Tenderly. He started Tenderly at the hackathon in 2018, so I think all of us wish we were there. Please welcome them with a round of applause.
Hi everyone, are we ready for the very final panel of this event? Is the energy still high in the room? I hope so. So great to see so many of you show up at the event to learn more about the institutional adoption. Before we start, I'm going to introduce myself. My name is Marina Barsheva. I'm the CEO of LKI Consulting. We're a growth firm that is bringing TradFi institutions on-chain and retail DeFi protocols, as well as L1s and L2s to capture the institutional market. Today, we have an amazing lineup of panelists, and I would like them to take a minute to introduce themselves. We'll start from my left with Claire.
Hi everyone, my name is Claire Balva. I'm the general manager of Adan. Adan is the biggest professional association for the crypto sector in Europe. And before this, I have been working in the crypto sector for the past 10 years, mostly in crypto consulting. I created my company that I sold to KPMG, and I also spent 2 years working for D-Block.
Hey everybody, I'm Charles from S&P Global. S&P Global is leading credit trading agencies, a leading index provider, a leading commodity price provider, among other things. I lead digital asset for every division at S&P.
Hi everyone. So I'm Nathan, Chief Ecosystem and Revenue Officer at IXEC. So basically I'm leading the ecosystem growth, revenues, and scaling the privacy infrastructure to on-chain finance.
And hello from me. I'm Andrei, co-founder and CEO of Tenderly. So we've been building professional developer tooling and infrastructure in the Ethereum space for the past 8+ years, and are now looking to see how we bring that expertise into the broader world.
Awesome. So I would like us to kick off today by talking about the market. Let's be honest, Bitcoin and altcoins have seen better days than they are seen today. But if there is one thing that is actually thriving, that would be RWA. Over the past 18 months, tokenized treasuries have hit 11 billion. Private credit is at 12 billion. What is the one RWA trend that you see right now in the market that you think is making a difference?
Well, I think you've said it. The volumes are like reaching an all-time high for RWA, and especially for treasuries. What impresses me is actually lots of small companies are considering investing that treasury within tokenized funds. For example, one of our members is Spyco. I know lots of small companies investing that treasury in this kind of company. And I think this is great because this is democratizing the overall crypto space to a lot of to many new players, and yeah, that's amazing for me.
So yes, the tokenized money market fund are definitely one. There's a trend right now with tokenizing stocks. There's some interest in tokenizing carbon credit. All of the type of fund are being tokenized. S&P 500 is being has been tokenized by Centrifuge. I think it's even on things like Morpho right now. So there's different angle to that. On one angle, you have the fact that if you tokenize before, people would ask, okay, why? One angle was to bring the yield to the blockchain, but now there is the other way around, where, well, if you have the S&P 500 on the blockchain, now you can get an extra yield on it because of the vault, which is another huge trend.
Yeah, definitely the RWA and tokenization is the hot topic of this edition, I would say. Everybody's talking about that, but I think we're shifting from a perspective point of view, which is before it was, can I tokenize it? And now it's more, can we build the infra around these assets, and can we do something else just before tokenizing? So this is definitely interesting. I mean, the asset classes, I think we will talk about that later, but you can see different things. Yeah, it's moving from very simple assets to T-bills and stuff that institutionals are very familiar with, to different new assets, and that's very, very, very exciting. Yeah.
I think for me, it builds on what you said, in the sense that I think now we're thinking both in terms of, okay, this thing is cool, but also how do we build it into something that's complete and useful and ready to hit the broader market. This is the first time that we're seeing that there is some openness and some excitement from the Web3 industry specifically to be open to new types of adoption and new types of activity there.
Yeah, and also because the market was very stable for a long period, and now we're having a new power and new liquidity and new innovation that will bring something new to the market. So that's exciting when you're in the market since a long time.
I would also add, this is one of these rare moments when traditional companies like banks and crypto companies actually have the same vision, see the same thing. Usually they have very different interests, and now we are actually seeing crypto exchanges and large banks saying, okay, so we want to tokenize the stock market, for example, and we want to offer stocks on-chain for our users. And this doesn't happen a lot, to tell you. For the past 10 years, it hasn't happened a lot. And when you have all the players saying the same thing, it also means that the regulators may move faster to allow it in a, I hope, quick way in the coming years.
And way less infighting.
Amazing insights. I would actually stay with Claire on this one and talk a little bit more about regulation. You work so closely with regulators in Europe, and MiCA has been one of the most clear frameworks if you compare it to the fragmented US regulatory framework. But Europe is still largely losing in adoption to Hong Kong with its sandbox environments, to Singapore with the Projects Guardian. What are some things that need to happen for this gap to close and for us to see a better adoption in Europe from REC perspective?
Your question is interesting, but the truth is regulation is not the number one factor to make things go faster. Actually, Europe lacks investments, for example, much more than a better regulation. Regulation is key, but it's not the whole thing. You can have the perfect regulation. If you don't have the money and the risk-taking players, then it won't work. But you're right, our regulation is far from perfect. And for example, when MiCA was adopted, I criticized a lot the whole stablecoin regulation, because I think it is too strict and it was maybe too soon. And it makes it very hard for crypto players and even for banks or large institutions to issue stablecoins in Europe. The DLT pilot regime, for example, is very interesting, but the caps, the thresholds that are being discussed right now are still too low. So there are many things that we could make better and that would make it more interesting for new crypto players and for entrepreneurs to create companies, because in the end, this is what works. We need people who create companies or people who work at bank and who want to take risks and create those products. And for this, they need to see the business opportunity. And if they see a clear regulation, but that is too strict and that makes it not so interesting to create a new product, then they won't go for it.
So Claire is actually touching on something extremely important on the challenges that institutions are facing to get adopted in crypto. And I would like to ask Charles, S&P introduced tokenized indices that track digital assets. We have those high volumes among RWA, but the products itself are not that common. What do you think are the main factors that are preventing the adoption, and what would be some of the concrete steps you'd suggest to accelerate that?
So one of them for sure is risk signals. Like when you're in traditional market, if we want to have a secondary market for RWA, which is something that I think everybody wants, you need to be able to assess the risk of an asset and agree if you can be on the other side of it. That's something that is missing, so we'll need to have this risk signal better defined and ideally machine readable and within the token. Then you have the benchmark. When you're in TradFi, you don't compare you have a lot of different type of benchmark to compare the yield that you're getting. You don't really have that in DeFi right now or in RWA. That's something else. And then it's another third thing would be the integration with the pipe of TradFi. It's something that is being built and is needed for adoption. Now, going back very quickly on the regulation point, it doesn't really matter. It's good, but like all the POCs are not something I'm very interested in. It's always a good press release, etc. There have been a lot in Singapore. Singapore have been very early with Project Guardian, but there's not many very real high liquidity use case that we could mention today that are the commercialized version of Project Guardian. And the problem with Mika was exactly what Claire touched on. It's way too restrictive, and a classic example of when a new technology appears, the US create a company and Europe create a regulation.
I think my panelists are really reading my mind today, because my next question was around liquidity and secondary market. We'll turn it to our full panel, and I'd like to start from the other side of the room this time. Many institutions are holding back because there is a challenge around liquidity and secondary markets. What needs to happen for the investment potential to scale?
Yeah, I might be the worst person to start with on this one. So I can talk on the complexity that is the roadblock there in terms of having the confidence and the capabilities to bring in this type of volume. I think a lot of people are scared right now to work with blockchain as a thing, but I couldn't really talk beyond that.
So then I will jump in. I think again 2 years back the idea was just take an asset, put it on chain, and call it innovation. Now it's more focused on pricing, liquidity, risk management as well, which is definitely important, I think. So to scale, we just have to take all of these bullet points to make it just boring enough to scale, let's say. It doesn't need to be so much innovation, so much new stuff to add to the existing ecosystem, but it just needs to work, basically. Because the money that will be on the table by the person of who is putting this money on the table, which is institutionals and professionals in finance, they just need something that works, and then we need to build the infra rails to make it happen for that. So liquidity is very important, but I think liquidity and risk management as well, because when we'll take an asset and put it on chain, it needs to be super clear to who can invest in this asset for what, at which risk as well, and what is the exit verifiable on chain as well.
Just a quick point on that, just in case some people here missed it, but it is happening. And if you saw the latest comment of LifeInc, in his later he said, and I quote, tokenization will do to Wall Street what internet did to mail. So when you have LifeInc and BlackRock saying this, you can see that well, even if there is also different issue maybe with liquidity today, which are being solved when you have, for instance, Coinbase providing liquidity into Morpho and then reassigning to RWA token. But there is a very strong trend right now, and it's something that is really happening.
Your question was, how could we make it scale, right?
Yes.
Well, there are many very small topics like, I don't know, tax law in France, regulation on very specific issue. But I would actually say there's also a matter of UX that is very important. Most people who are interested in finance today and who are over 30 or 40 years old, they are used to traditional finance. If you want them to move to crypto and tokenized finance, I was not thinking specifically of you, sir. If you want them to move specifically to crypto, you need to make it as easy as possible, and they shouldn't have to learn something new. It should come easy to them. And today, I think that DeFi is still quite complex. There are risks that even, honestly, I can't evaluate, even though I've been in crypto for a long time. And I think it's still highly complicated. If you take crypto payment, for example, it's not the topic of this roundtable, but I think it's a very good example. Crypto payment takes like a few seconds more than a normal payment, and that makes it impossible to scale for the large public, because people will not accept to spend like 2 seconds more to pay something. And it's the same for DeFi. If you don't make it very easy for people, the large audience will not go for it. So you need to make it more easy.
If I can just add something on that, I think the overall idea of people will have wallet and people will work with a wallet is there. Some people will, but you'll have this abstraction layer. Like, for instance, you can invest in DeFi right now with what, again, I mentioned Coinbase again, but like did, where they create the wallet for you, everything is abstracted. So this is necessary and will happen, is happening. You won't have a wallet to interact with DeFi if you're an average user.
I'll make a quick comment on that. For a long time, we've been talking about mass adoption in crypto, and we work with a lot of founders who like to build complex technology. They need to build another bridge, another something. And we got so tired of trying to explain to them that this is not what the market needs, that we asked people who were in DeFi for a long time, for over 5 years, they are natives, how do you transfer an asset on-chain from one chain to the other? These are DeFi people. The answer was 100% the same, centralized exchanges. So this just backs to the point that Claire was making. If you don't have a proper UX, it will not go anywhere. I'm turning to Andre for this one. The panel would not be complete if we're talking about the infrastructure without the topic of security. We have infamous cases like Bybit losing over 1.4 billion last year, but the stakes for institutions are much, much higher than that. How do you see the overall process of managing risk in DeFi, and what are your recommendations on that?
Yeah, it builds on actually the conversation of UX perfectly, because if you think about it, okay, the end user UX is important, but it is also important to think about the UX in the experience of the institutions bringing all of this to the world. And these operational mishaps, these, clumsy fingers, exploits because of the lack of the expertise are actually what is going to be slowing the industry down a lot more than hacks on complex protocols, because complex protocols is, as you mentioned, not the path to mass adoption. It's something straight, simple, that works, no frills. So for us, I think it's the job of actually making sure that how you run your crypto arm in this broader enterprise is something that is potentially even more important than how do you go about developing that and how do you launch it. So it's much more of a day two thing as far as we're concerned, and that's why we've been working with the nerds that like to make it complicated for our entire career, but we realized that if we want to help out this next wave, we're going to need to do that by switching, not from going deep into the depths of the blockchain, but going wide and thinking about how this blockchain now integrates between two networks. So, not sex, but maybe like a bridge, How do you on-ramp that onto the rest of the stack that the institutions are talking about? So I think our opinion there is that validating and sort of simulating all of this much more complex behavior in like a risk-free type of environment is our small contribution to that effort.
That's an amazing answer. And Nathan, over to you. BlackRock's Biddle is now up to 3 billion. We have Franklin Templeton, Goldman Sachs, who are launching tokenized money market funds. What are some use cases in RWA that you see as the most popular right now?
Yeah, definitely. We can see today that the most common use case is the simple one, which is T-bills. How do you tokenize assets that everybody's familiar with? We know the risk, we know the asset class, we know how to use it in a day-to-day basis for on-chain finance, but also traditional finance. So that's definitely the main topic. But I say that to scale really in terms of use cases and in terms of needs, institutional are starting to understand that they need also to have the idea of everything they put on chain is visible by the public, and so also visible by their competitors, basically. So when you're putting on chain things, strategies, business logic, you don't put that for you, but you put that for the public, which is immutable as well. So I think the new use case would be institutional needs to protect their business logic to the competitors and to the market, so active strategy, position, balancing, but also they need to still get the compliance for that, so which is on-chain auditability and how do you do things in a private and secure environment, but still compliance and usable in the long term of traditional finance perspective. So I think that could be a new use case, and this is basically what we also are building at iExec. We build confidential computing directly for on-chain finance. So using the confidential token product that we launched today, so to have the hidden transaction and balances, but also to get the selective disclosure. So we try to address this problem, which is, I think, something that institutional will face very soon.
Thank you, Nathan. We're about to hit the top of the hour with our panel today, and I'd love us to wrap up with a blitz round. If you are to get only a couple of words to answer the next question, what is the one unexpected emerging use case in RWA that you bet on to arrive in a year or so?
I could steal the privacy. I think privacy is the most versatile one, definitely the most interesting one. I mean, I'm sure others are, but from the technological perspective, that's a one true blocker for like a whole category of them.
I think I will definitely keep that as well. Privacy is something that could be, I will steal also the words of Claire, it needs to be very UX friendly. If the privacy is very complicated to use, that will never scale. But if the privacy is directly integrated within the protocol and it's absolutely not something visible for the end users and for the investment project, I think this is something really important in the long term.
So the question was unexpected, right?
Unexpected.
To me, it was unexpected to see what the obsession in Asia with a single building tokenization.
Well, it's hard to answer about something unexpected, but I would react to the answers of my colleagues on privacy. I remember back in 2016 and 17, we already spoke about Zcash technology and ZKP, for example, zero knowledge proof. And maybe I've become cynical, but it's been such a long time that we have talked about it that it's hard for me to believe that it's going to be like the one thing in the next year or so, because I think it's going to take a long time before our own identities can circulate on chain. So I really believe it's going to come to that, but I think it's going to be much longer. And to answer the question, it's not unexpected, but I really think the next big thing are stablecoins for payment. So it's boring, I know, but for me, it's the one thing for the next 2 years.
I want to wrap up this panel by saying that crypto went a long way. We've had some shady ICOs in 2016 where the only thing you needed to raise money was 3Ws, a website, wallet, and a white paper. Then we've had NFTs, we had AI agents, meme coins, stable coins, payments, and now what I call an institutional renaissance. But the problems that we are seeing, regardless of whether a retail is coming to use the products or the institutions, are majorly the same. We need regulations that make sense. We need the product use cases that actually solve the problems and bridge the gap between the financial primitives and the users who need to adopt them, and of course the usability of the product itself. We had a fantastic lineup of panelists. Please give them a round of applause, and we thank you for the time.
Thank you.
Thank you.
Thank you.